but yeah, I think it's all worked out very well towards the end. And I think I'm at a phase in my career where I'm enjoying what I'm doing. I like what I do at this point of time, and this is one way of actually trying to give back to the community, because I think uh, it's also about when we were at engineering. I think if we had sessions like these where people from the industry would come and talk to us, I think it would have been very beneficial and very valuable to the students. And I think this is my endeavor to actually try and do that. And I'm glad that you're also doing the same for your students, and then trying to get folks from the industry to come and talk.
Okay, very nice to hear that. So to start with, Abhishek, you have worked across various industries and roles over the last decade. If you could describe your career so far in just 3 words, what would they be and why?
Um, yeah, it's almost like some sort of like a elevator pitch about how you describe yourself if you have were to be given an opportunity. So I think there are like multiple words that I can describe my career with, and I think I do have an answer which I generally give when I'm talking to folks and etc. But I think if I think hard about how I would describe it, I would probably say that the number one thing that comes to my mind is I would say curiosity, right? I think that's what led me to where I am today. Curiosity is around the fact that you know trying to go deeper, trying to learn more, trying to do beyond what's the scope that's handed over to you. um, that was something that actually kind of like put me on the path to starting up, because I wasn't very happy with what I was doing in Deloitte, where I had a very limited scope of work, a very defined kind of a charter, and I wanted to go broader, I wanted to learn more, I wanted to explore other avenues of how businesses are built, etc. So I think that would be one thing, and that's something which I've continued doing in my career, right? Like even today, I think curiosity is something that I try to satisfy by reading books, by looking at content. It could be content which is audio podcasts, it could be video podcasts of industry leaders and things like that. So that would be one thing I feel. The other one would be problem solving, right? So inherently, I think product management and starting up is around solving problems. So I think that's something which I really again value, and I feel that I'm pretty good at it. Uh, Problem solving again essentially is to do with how do you identify what's the real uh, you know problem statement that's you want to solve for, and you really go full out, and you try and uh, you know uh, build something around it which is valuable to your end customers, right? So again, with my startup, that's something that I tried to do. I saw there's a big problem in real estate around the fact that there was no pricing transparency. It was a problem that I went through myself for 3 years when I was building my first company, and that's how Prop Rates happened. Because I felt that that's something that should be solved. It is big enough to be solved, and it's an important problem to be solved. So that would be the second thing I feel. And then the third one would be, I think, measured risk taking ability. Again, that's something that I have manifested multiple times over my career, where uh, risk taking is one thing, but to be able to identify what's your risk reward ratio, to be able to identify what's your effective plan B, and to be then able to take the right choices, which then may or may not materialize, is something which again has defined where I am today. So I would probably say that curiosity, uh, problem solving, and the ability to take measured risks is the three things that I would describe my career so far.
Okay, hi Abhishek.
Hi.
So what I wanted to go ahead with asking is that
There's
just
a
what's
echo.
something that you feel
There's an echo actually. So
is it better now?
Sir, it is echoing, so the questions can be asked from a different instrument.
So Rasnath from BTech CS has joined me to host this session. Uh, Going along, the next question for you, Abhishek, is I want to know, given that you manage multiple high pressure projects, is there any specific tool or habit that helps you stay on top of everything? Basically, I want to know that inherent trait or probably some habit that all of entrepreneurs have, so that our students can go in that direction and follow those habits.
Right. Uh, so I think not in any specific order, I would think, but I think to a large extent, when you're a student or when you're on the other side of the fence, you think that entrepreneurs or people in the industry do very fancy things, but that's not the case usually. It's about doing the basics right, and doing the basics consistently is what basically makes you very good at what you are, right? So I would think that the three habits that I feel have helped me so far in my career. One would be, again, going back to the first question that you said, where I answered curiosity has been like the one trait. So I think reading has been one particular habit. Reading would not just be keeping abreast about what's happening overall in the tech world, etc., but also consuming a lot of content, be it books, constantly upskilling, trying to challenge myself, because beyond a point, like once you reach a stage where you're like 7 to 8 years plus in your career, you tend to gradually settle down. Like the amount of time you spend on upskilling yourself, or the amount of time you spend on figuring out what's happening beyond your scope of work is very limited, and I've seen that happen to a lot of folks in the industry. I struggle with it myself. It's not that I'm at the top of my game there, but at least I try and make conscious effort wherever possible to read as much as possible, to keep updated with current events, and even if it's not possible to read books, I try and at least have audio podcasts which I listen to, which I'm wherever I'm going, I'm driving, I'm in a like commuting, and that's something where I can't focus on reading. So that's my alternative mechanism that I try and inculcate as much as possible. So that I would say is that one habit which I think is very beneficial, and something that people should definitely imbibe. The second one would be, I think, planning your schedule and planning your day. Right, now that's again something which is very basic, but it's very powerful as well. So the way I look at it is that before the start of every week, I look at what my calendar is looking like. I plan my day in terms of what meetings am I going to be attending. I cancel meetings which I feel are redundant. I look at slots where I can book time on my calendar and block time so that I can do personal work. And when I say personal work, it's not my personal work, but what I mean is that focused work where I can write a document, where I can brainstorm an idea with a bunch of teammates, etc. So that's like the time that I have to carve out myself in my calendar, because generally when you're in product management and you're dealing with a lot of stakeholders, your calendar can tend to become very busy and very occupied. So a large part of it is around how can I manage my schedule as effectively as possible. So I start on a Sunday, I plan my entire week, and then even on a day-to-day basis, I create a checklist of items that I need to do today. So I literally write down the top 10 things which are most important that I would want to get to. And it's very satisfying when you're at the end of the day, when you're able to strike off 5 or 6 of those items, because that really means that you have actually delivered good work on that particular day. Now, this is a double-edged sword, and we can probably get into it, because you may, very easily check off very easy items off your list. But the idea is, or the intent is, that you focus on the P0 items, or the biggest priority, or the biggest, impact items, and that's what you really try and go after, especially early in the day, things like that. So that would be the second one, like maintaining a good schedule, being on top of it, and sticking to that schedule is of paramount importance, I feel. Um, and the third one, I think, would be I think, pursuing something outside of work, right? So for in this instance of my case, I think it's badminton. That's my form of physical and mental workout, because there are days where you'll probably not do very well at work, and it's not just about work, it's also about your personal life. Maybe there was a job that you were applying for, you did not get. Maybe there was a test that you took, or an exam that you took that did not go well. And it's very important for you to be able to bounce out of it and get back to what you were trying to do with the same rigor. And I think that's where having something that you really enjoy, which gives you that mental and physical kick, is something which is very, very important. And that's something that I have developed over the last 5 to 6 years, where I consciously try and block time again on my calendar to, regardless of how busy my day might be, regardless of how much work and pressure I might be in, I definitely try and carve out at least an hour in the day to go out and work out and enjoy the game that I play. And I've seen that, especially if you really enjoy what you do as an outdoor or as an activity, then that actually helps you back to come back in your work profile as well. Like, for example, if I were to win in my badminton games, then that gives me that motivation to come back and again perform well. It brings me out of the low feeling or the low motivation period that I was in prior to that. So it's very important, I think, for everybody to have something which helps them. It could be yoga, it could be meditation, it could be a sport that you really like, it could be gym if somebody is really passionate about building their body, etc. But that's something which I would really recommend. And the sooner or the earlier you pick it up, the better it is, because then you kind of like build that as an habit, and it doesn't look as a thing that you have to force yourself to do anymore. It's almost like naturally part of your day-to-day schedule. So yeah, I think those would be the three things I would think.
Yeah, absolutely right, Abhishek. You rightly pointed out the importance of reading books. At the same time, you also emphasized on importance of planning your own day. When you want to be a product manager, you first have to plan your own day. And thirdly, get involved into some sort of physical activity, maybe a game, outdoor game, or yoga, or something like that, meditation. That was a pretty nice answer from your side. I hand it over to Rasnath now for next question.
So I just wanted to ask that what would you say is a pivotal moment that kind of shaped your career? Because you said it was that curiosity when you worked in Deloitte that kind of pushed you. So can you just talk a little more about that? And also, can you just add on how your IIM journey, like how is it getting into IIM as well?
Sure. So I'll take the second question first, around the IM journey, right? So I think I always wanted to do an MBA, right from the very beginning. From the time I graduated, I had the option to take up masters, and I had gotten an admit in one of the universities in the US. But I wasn't sure at that point of time whether masters is the right choice or whether MBA is the right choice. So I decided to defer my admission, and I kind of like went into working with Deloitte, because I thought that that would give me the kind of exposure that would help me then decide which is the right path for me. And I think within a year or two of Deloitte itself, I had realized that MBA is definitely more of my calling, and that's something that I would probably want to do at some point in my career. But then the startup happened a year and a half into my Deloitte experience. And then I continued working on my startup for the next 5 to 6 years. So there was always that thing in the back of my mind that I would definitely want to do an MBA. It's just that I wasn't sure about the timing at that point, that when I would be getting a chance to do it. So I think in 2016, my second startup, PropRates, got acquired by PropTiger. I ended up joining them for a period of like 6 to 9 months, where I was primarily working on integrating my product with theirs. And then once I was done with that assignment, I kind of had this option there that I could have either continued working with them as a product manager, or I could have gone back to this MBA thing, right? So I think there were two motivations back then. One was the fact that when I was doing a startup, regardless of whether you like this answer or not, but there is a lot of emphasis that a lot of VCs and a lot of investors put on having a a good background when it comes to your college, right? So which is where if you're coming from a Marquee college, NMIMS, ISB, SPJN, IIMs, then obviously you have a slight advantage over another founder or another person who may not have come from the same background. And it's not fair because I've been there, and it's definitely not fair because you should be measured on the basis of how good your business is or how well you're doing in your business. But this is just the way the world works, right? So you can either fight it or you can play the game using the rules of the game. And that's where I felt that if I were to check this thing off my list, and if I were to get the MBA from a good college, then it would actually at least help me in the future wherever if I do decide to start up again. Then in that case, at least that checkbox is taken care of, and tomorrow I will not have this concern that I don't come from a Marquee MBA background, right? So that was one motivation back then. And the other bigger motivation, I would think, was the fact that in 2016, I had spent almost like 6 to 7 years doing real estate. Like saturated with real estate because there's only so much that you can do, and you need another, thing to focus your mind on. So I felt that what is the best way for me to diversify and move into a different industry, right? So one would have been to start applying for jobs or to start, looking at another business idea back then. But that's not what I wanted to do because, like I said, I had just gotten through the rigor of building a business for 6 years. So I wanted to take a step back, maybe explore a different industry, try and learn more about that industry. And then if I really come up across a new idea or a business idea there, then I could have probably gone and ventured out again. So which is where I felt that doing an MBA would be beneficial because it really helps you very quickly diversify and move to a different industry if you really want to. And that's exactly what happened. The moment I got done with my MBA, I joined McKinsey as a college placement option. And McKinsey, by virtue of the way it works, right, they do very small projects with clients, and typically these projects are 3 to 6 months long. And because of their 3 to 6 months long, and because you're not tied to an industry, I literally had the good opportunity and the good luck to work on multiple different assignments, right? So my first assignment was with a banking client. My next assignment was with an insurance company. The third one was with a healthcare consulting, gig. And then the fourth one was a telecom thing. So within a very short span of time in McKinsey, I was able to realize the experience of at least working on 4 to 5 industries. And that really gave me the kind of insights that I needed to then decide what my next career path should be. So I realized that, okay, this is something that I really like. This is something that I don't like. For example, I don't like telecom because I don't enjoy it as much, right? There's nothing wrong with telecom as such, but it just didn't appeal to me as an individual. I'm sure there are a lot of other folks who really like telecom, and if I ask my folks or my colleagues in McKinsey, they have built careers in telecom industry itself. So it's very personal choice. And I think that's where I realized that my calling is more in industries which I feel are more intuitive to me, and which was travel because I'm an avid traveler myself, which is e-commerce because again I'm a very avid user of e-commerce. So those are the industries that I tried to then move towards, and that's what I have done eventually in the last few years.
So, was IIM also a good networking opportunity? Because I've heard a lot of people just go there for the sole purpose of just rubbing shoulders with good possible co-founders and something like that. And also, since at prop tech you basically seeked seed funding in prop tech. So, how does one go about it raising seed funding? And can you just break down VCs for everyone who wouldn't really know about them right here?
Yeah. So yes, so it's a good networking opportunity, but that's not the core reason why somebody does an MBA, right? So that was not the top of my mind, number one point that the reason why I wanted to do an MBA. I think my number one point was to get a good brand on my resume, so that tomorrow I can associate and I can call myself an IIM alumni. So that was one thing. The second thing was obviously the curiosity and again like the education that I really wanted, right? Because I had done business, so I knew different aspects of business. I knew how to read a balance sheet. I knew how to process financial statements. I knew how to, because I was also hiring. I was also doing marketing for my own company. So I had already seen different aspects of business, and now I wanted to go slightly more deeper into one particular aspect, and that's what MBA actually gave us. So in hindsight, I would think that for somebody who's doing an MBA right after college, and for somebody who's doing an MBA after some years of experience, I think the person who's doing MBA after some years of experience is much better placed, because they are able to relate with those concepts that are being taught in the classrooms much, much better, right? Because having been part of, like, even if I was in Deloitte and even if I was doing a lot of work in Deloitte, I would still be able to relate much better with some of the concepts that were being taught there as compared to a complete fresher. So those were my primary motivations, and then of course it comes with a lot of other benefits, and like you said rightly, that networking is one benefit, and that is something that you see slightly further down in your career, right? So right now, for example, today, after having 6 years of it's been 6 years since I completed my graduation from IIM Ahmedabad, I can now see the benefits of networking, because now when I try and apply for a new job or for a new I would say a new role within Amazon itself, a lot of the folks that I actually end up reaching out to are actually my alum networks, right? So instantly, instead of me having to pitch to them or me having to really reach out to them, it's almost like, hey, I'm batchmate, and I'm from this particular batch, and how was it in college? And that's what really helps to break the ice very quickly, right? So now I'm able to see a lot more benefits 6 to 7 years down the line. But like I said, it takes time for that to happen, because I'm sure, like, tomorrow when I also reach a further more senior position in Amazon or any other company, another person who's probably a 2023 pass out will probably reach out to me in a very similar kind of a way, saying that, hey, I'm your college alum, and I really want to reach out to you, and this is a good opening that I saw, and things like that, right? So I think it compounds over a period of time, but it's not something that you use, start or it's not the top reason why you try to do an MBA in the first place. Yeah, and on the other question on the VC front, I think VCs. So the thing is that when you're doing a startup, right, there are multiple ways that you can fund your startup. One is that you can start with some sort of like your own seed equity. So let's say I've worked in Amazon, I have my, let's say, a war chest of X amount of money that I have parked aside, and I think that's something that I would want to put into my business and invest in myself. That's one way of going about it. The other way is friends and family. So you can actually ask for funds from your friends and family, and that's been the traditional way of how Indian businesses have been built, where your dad or your family and your friends are the ones who fund it. But then gradually, as the Indian ecosystem has matured, right, there are a bunch of other institutions that have sprung up, which also now take bets on startups, right? And it's a very risky bet, because it's a 0 to 100 kind of a bet. So either the bet plays out and you really, really win. So think, for example, Zomato, right? Like a person who had invested 1 crore in Zomato when maybe the Zomato founder was out there asking for funds, is today probably sitting on 100 of crores, right? Because that's how the bet has of Zomato has panned out. It's become $1 billion company. It's huge. It's publicly listed, etc. And so can be the case with other kind of startups, right? There are a lot of startups which completely fail and shut down. So your money that you invest can actually go to zero, or it can go to 100 very, very quickly in a startup. So it's only for people who understand the nuances of it. And I think the new institutions that have sprung up are most likely your angel investors. So angel investors are a bunch of people who come in very early at the seed stage, where your product is not even ready. You just have an idea, you just have a prototype, you have some semblance of what you want to build, and you have some expertise in building that product in that industry. That's when some people take big bets on you and they give you some money. And typically your seed fund or your angel investment is in the range of something between 50 lakhs to going up to like maybe a few crores, right? And that's the kind of investment that I raised for my startup. I think back then in 2015, 16, I raised an angel round of somewhere around 1.25 CR for my company, which was supposed to last us for like a year and a half. And that's one thing. And then, of course, like as companies scale, their need for capital also keeps on scaling, and which is why you then have bigger institutional players coming in. So then you have the concept of private equity players, you have the concept of venture capitalists. These are people who basically put bigger money and bigger risks, right? So let's say Zomato has now progressed towards a company and they are already showing promise, they are a full-fledged business, they have revenue, they have some sort of profits, etc., then that's where in order to now scale and grow to the next level, if you want to go from 100 to 100, like let's say 100 million to $1 billion, so that's where you come, and these VCs help you with money. Typically the size of investment here can be hundreds of crores, it can be 200 crores, etc., and you've seen that right now with Zepto, which has been raising a lot of money at this point of time. You've seen that with a bunch of other companies, like Swiggy also is raising huge amounts of money, etc. They're now moving towards an IPO. And essentially IPO is the last stage, right? So the end stage of it is when you exit, you sell and you go public, and that's where these investors who had put in their money in the beginning stages get their return on investment, right? So when the public enters, when the retail participation starts happening, and it's a good business, that's when you get an exit. Sometimes you may not get an exit as well. So Paytm, like for example, it listed at almost like 2000, and now they're down at around 600. So they've actually lost money, right? I don't think any of their investors, at least the late stage investors, have made a lot of money out of it. Maybe some of the early stage investors did, but that's how the startup ecosystem and the venture capital thing evolves.
Thank you so much. That was a really informative answer. So you did just mention exit. So what Piyush Bansal once said on Shark Tank was that founders who don't think about an exit do give the best exits. So what do you really have to say? Like, what would you have to say about exits and how you went about getting exits with your two startups?
So I think, see, again, the thing is that you have to look at it from both sides of the equation, right? So there is the founder side of the equation, and then there is the VC side of the equation. Piyush Bansal, when he made that statement, I think he's kind of making that statement being on the other side of the thing, which is on the VC side. Now, if someone, let's say for example, if you come to me and you're asking me, X amount of money, let's say you're asking me 1 crore as an investment, right? Now, what is my risk reward ratio, right? If I have 1 crore to give you, I can easily put this crore in, let's say, real estate, and I can earn X amount of return on that capital, right? I can easily put this crore in, let's say, private equity or public equities in, let's say, the index, or in small cap companies which are publicly traded, and I can make 25 to 30% return, right? So why will I risk my money by giving it to someone like a founder who's starting with a business and who may or may not even succeed, right? So my risk reward has to be very, very high. It's only when I see that tomorrow I may potentially make 100% on my investments in a very, very short span of time is when I will be ready to risk that money and give it to a founder, right? And when I do that, I need some basics from the founder. So I need to be sure that the founder is in it for the long term. I need to make sure that this founder is fully invested in this business and he's not doing it part-time, right? So which is where I think that nature of or the essence of the statement comes from. That if the founder is looking for a short-term thing, if he's looking for an exit, and if he really wants to just quickly cash out, then that's not the right founder to be backing, because he's going to run away, or that's my perception as a VC, that this person will just take a very quick exit and move out, and I'm not going to get the kind of reward that I was anticipating by making this investment in the first place. So that's his perspective when he's saying that statement, right? But then there are a lot of businesses that are built from the sole reason of actually getting an exit, right? So it totally depends on what your style is. So I know founders from IIT Bombay, and there's this founder Kashyap, who was also considering an angel investment in my company. He created Open Table for the sole purpose of selling it to Zomato, right? And that was the part where you could make bookings or reservations in restaurants by booking your table. So you could literally say that I want to come in at 2 p.m. 4 people will be coming in, and this is the table that I want to book in the restaurant, right? That was Open Table as a concept. And he knew that this is something that Zomato would be very valuable for Zomato, or for any other company that's in the business of food, etc. And the whole company was built from the purpose of being sold, and from the purpose of an exit, right? And then there were founders who come with that kind of mindset, and there are investors who are okay with that kind of mindset as well, because there I'm promising an investor a short exit. I'm telling him that you give me X crores and give me 1 year's time, and within this 1 year I'm going to build something which is going to be so valuable that somebody's going to buy it out, and this is the kind of buyout that we'll receive, right? So that's how I think there is nothing right. Like I said, there's no right or wrong in this. It's more about what perspective are you bringing in, and are you able to broadcast it to attract the right kind of people? Maybe Piyush Bansal is not the kind of person who will want to fund someone who's looking for a quick exit, but there are tens of hundreds of other investors who will believe in that philosophy and who will be like, okay, this seems great. I'm getting, I'm investing 1 crore, I'm getting 5 crores in a year, and it's a very high probability that this will happen. It's a great investment for me, right? So it's like I said, it's on what side of the equation you are and what do you believe in. There's no right or wrong there.
Makes sense. Makes sense. So you did also talk about having to market your product yourself. So how does one really go about with building a product from 0 to 1, like completely from scratch? And how do you also get the early adopters on board? Because I think that's something.
Yeah. So I think when we started with the idea of prop rates, let me probably maybe take a couple of minutes to just explain what we really wanted to build and then how it really panned out, right? So we knew that, and I think people who know the history of how stock markets have been built, right, would realize and would be able to resonate with this. Prior to 1990s, the stock market was very similar to how the real estate market was, right? Shares were traded in paper format. So just like you have an agreement today for a real estate property that you bought, similarly, shares were also physically traded in the form of receipts and in the form of some registered copies. And there was a very bad form of price discovery, right? So for example, if today I wanted to sell my share, the only way for me to sell my share was to call a broker who was sitting in the stock market on the floor and ask him that what is the price that I will be able to share, let's say sell 10 of my shares of Reliance, right? And that person would give me an answer, and I had no other way of validating that information but to believe in that. And that is the reason why all of these brokers were very powerful. And at the same time, I would only work with trusted brokers, because this person, if he's telling me that Reliance will sell at 100 rupees, I have to buy that and I have to believe in that. It may very well be possible that Reliance is actually selling at 120, but he's only telling me 100 and he's pocketing the difference of 20, right? So that's how stock markets were at one point of time. And then came a very big change where everything got dematerialized, everything went online. And today we have a very, very strong mechanism of price discovery, right? So if I want to now today know what the price of Reliance, I can just go online on NSE, BSE, and any of these apps, and I can see that, okay, Reliance is being traded at this price, right? I can see the order books, that how much people have bid, how much stocks are on sale, and I can see the trade books, that what is the last transacted price for the, let's say, last 100 stocks that was sold, right? Now that is the same position that I thought real estate was in, right? So today you have Magic Bricks, 99 Acres, and all of these websites where you see properties being listed, etc. Now, those are primarily, if I were to draw an analogy, those are your order books. That is, people are saying that I want to sell this property for 2 crore rupees. And then there are people who on the other side saying that I want to buy this, or I'm willing to buy this property for 1,80,000 crore rupees, right? So that's the order book. But what we don't have in real estate today is the trade book, that what is it that the property is actually transacting at. That is only privy, or that is only known to the buyer and the seller, and nobody else has the information about it, right? So if I were to ask you in your own building, how much did a property go for, you do not have an answer to it, or you do not have a very strong answer to it. You may have some hunch or some assumption that it probably went for this value, but you don't have the real price that it got transacted, right? And that is what we wanted to bring about in real estate. That can we create a stock exchange kind of a platform for the real estate where people can come in, they can understand what their property is really worth, they can transact very quickly, right? And for that, the first paramount importance, or the first problem that needed to be solved was the problem of price discovery. That how can we make this price discovery so open so that anybody can come in and realize what is the right value of their property and what is it that they can expect, right? And that was how Prop Rates was born, essentially. It was about giving that transparency in pricing. And what we started off with was we started collating all the registration documents from across the country, figuring out what properties were transacting at, and then putting it online for people to go and have a look and download that information. So that is how it was. Now, coming to the part where how do you build it, right? So I think that there are three things that a business really needs to look into, right? There is the aspect of desirability. Now, how desirable is this product that I'm trying to build? Will customers pay for this? Is this important for customers? Is this valuable for customers, right? The second part of it is viability. The second part is feasibility, which is how feasible is this? Like, can I technically build this? Is it possible to build a solution in the right way, which I can then add value to customers. And the third part of it is viability, that if I were to build this and it is already desirable, it is technically feasible, will I be able to build a business out of it? Can I make monetary or economic value out of this particular proposition, right? So those three aspects all need to come together for you to be able to build a business. And the way to build a 0 to 1 kind of a product is that either you are an SME and you are so good with your industry experience that you know by in your gut that all of these three things will work out, or you can validate each of these three things separately, right? So that is what I went about doing. While I did have some real estate experience and I did have it in my gut that this will be a good, valuable product, I started experimenting and started very small. So I first tried to target desirability aspect, that if I were to put out this information, will people really value this? And that is the first version of the product that I actually launched. So I just put that information out there on a very, very crude looking, very, very basic bare bones website where all people could do was have a search box, type the name of the building, and then they would see some information in a very, very, very unstructured blob of text, which just basically read the building name, it told you the price, it told you the deposit value, the size of the apartment and things like that. And this is what I launched with. It was nowhere close to the end product that I really wanted to launch, but this was my way of experimenting and figuring out that how desirable is this information to customers? Will they really want this information? And when I launched this, within 2 weeks, there were almost like 100,000 people on the website querying about the information, dropping me comments that, hey, I want more information about this particular property. Can you help me, etc. And that was a very, very big validation that we had, that this information, if we were to do it in the right way, would be very, very valuable to customers, right? So you break it down into smaller aspects, you figure out what is it that you want to test with customers, and that is what you basically try and launch with, and then you work quickly through those iterations. So once we had the desirability aspect of it noted down, we then went into the other part of it, that can this be technically built in the right way, and can it be launched in the market in the next 3 to 6 months? And that's the second problem statement that we went after. So that's how you essentially plan a product, break it down into smaller pieces, break it down into manageable things, be very clear on what your hypothesis is, what are you trying to test, and what is the outcome that you're expecting. If your outcome is positive, great, you get validation, you move on and you double down on that bet. If you don't get validation, you iterate, you change your experiment, you change your hypothesis, you then again try and do it, and that's how you learn what is working and what is not working, essentially.
Yes.
Yes. It's, it's,
Abhishek.
Yeah.
So on this or the other platform, we have got the opportunity to listen to the people who talk about startups, entrepreneurship. They give us theoretical knowledge, and they also tell us about how to turn your idea into product. But then this is the first time we got an opportunity to listen to someone who actually has two products to his credit, from ideation to exit. It's a cycle basically.
Yes.
And therefore, I would like to know from you, जब अपना खुद का आइडिया इतना अच्छा काम कर रहा था तो अलग अलग स्टार्टअप्स में, देन और हर कोई चाहता है कि मेरा आइडिया अगर एग्जीक्यूट हो तो व्हाट कुड बी बेटर देन दैट, दैट्स अ ड्रीम फॉर एवरीवन. फिर जब अपना सब कुछ सही चल रहा था तो आपने अचानक से फिर अमेज़न में जाने का क्यों सोचा? क्योंकि फिर दो प्रोडक्ट के बाद में यू कुड हैव थॉट ऑफ सम न्यू आइडिया एंड प्रोबेबली would have turned your more ideas into more products and like that. So what's the reason of joining Amazon?
Yeah. So I think the two products that I had built, like if I were to take a step back, I did not want to exit the point at which I exited the company. I think it was an exit that happened because of circumstances. Uh, the fundamentals on which we had built the business had changed to some extent. My cost structures had gone up from where I was getting the data and procuring the data, and then that business was no longer viable to run within the frames of what we had imagined it to be. Right. So when I was raising money, I had promised that I would be able to take X amount of capital and turn it into ABC. Now that equation that I need 1 crore to do X had changed. So which is the reason why that viability of my business had taken a hit, and hence I felt that the acquisition was a good exit option, because it at least allowed me to continue with that idea and to place it in the hands of people who had more money to basically take it to the right conclusion, right? So that is the reason that exit happened. Now, coming to the second question, that why did I not continue another startup or build another company of my own? I think the first thing is that when I signed the exit, there was a non-compete clause. That's typically what your acquisition company will put in, that within a period of 3 to 4 years from the time of signing this acquisition, you cannot build a competing business, or you cannot build a business in the same industry. So which is one reason that I had a lot of real estate experience, but I was in a non-compete clause where I could not build another real estate business for the next 3 to 4 years. So that was one reason why I did not immediately start up. The second one was that I could have built a business in a different industry. But then the way I look at it, and I think this goes back to my first answer, right? When I said that I take measured risks, right? The measured risk is the fact that when I have some expertise and some knowledge about a problem statement, and where I feel that this problem is worth solving, it's worth putting my time and investment in, and there will be definitely a return at the end of it, is where I double down on that investment. And which is where, because of my lack of experience in different industries, I felt that the right way would be to first go around, get some more industry experience in different industries, travel, e-commerce, etc. And then once I have some significant amount of experience, once I understand the problems in that industry, once I understand the pain points that really need to be addressed, that is where I would be in a better position to again start up if I really wanted to. So now if I were to look back, I think that with 3 to 4 years of e-commerce experience, I know that what are the top 3, 4 pain points that customers have, which nobody is solving right now. So today I can come up with 5 different ideas in the e-commerce space, which will be very valuable to be built as separate businesses. They may or may not be like $100 billion businesses, but they will be valuable businesses in its own way, right? So that is my mental model or my way of thinking, that I would not want to jump into just building businesses for the sake of it, because I'm also looking at my risk reward ratio, that if I were to do X, what is it that I'm going to get out of it at the end of the day. And that equation was not favorable back then. Today it is. But it's a matter of choice now, that do I really want to get back into that business, or do I still want to continue working in Amazon and then maybe start after, let's say, another 3, 4 years.
Okay, so another question that I had is that, like, you did talk about a lot of challenges that you did face, but what are some other challenges that you faced as a founder? And for the lack of better word, I'm sure you must have faced a lot of hate from other people in the prop tech business. So how did you deal with that? And also, how do these lessons influence your time at Amazon now, or just basically your current work ex?
So I think we were too small back then to instigate any hate towards us. I think we were doing good work, so nobody really hated upon us. In fact, the day I launched my very first version of our website, I actually got congratulatory calls from multiple folks in Magic Bricks and from Housing.com, saying that we've been trying to do this for the last 5 years, but you just did it with a team of 3 people, right? So how did you even pull this off? And then they were trying to do it the right way. They were trying to, like solicit the government, talk to them, and try to, like win contracts with the government to take the data and then to convert it. We just went, scraped the data down, and then we just built the product the way we thought that was the best way to do it, right? So in fact, I think there was positivity in the industry, and people were like reaching out to us saying that, hey, we want to partner with you. If you have this data, can you give it to us in the form of APIs, so that we can then also start, leveraging or utilizing this data. So I think it was all positive that way, and I think maybe I'm fortunate enough that I did not receive any hate or any thing from any PropTech founder. In terms of the second one, in terms of the challenges, yes, it's not very easy. It's not hunky dory, right? There are multiple challenges that you face in a startup, depending on the stage at which you are. So, for example, in my case, we were completely self-funded for the longest amount of time. And when I say self-funded, it means that we were doing business, we were earning revenues, and then we were funneling those revenues back into our business to grow the business again, right? Now, that's a slower way of growing. Like usually people raise capital and that's a faster way of growing. It's an inorganic way of growing. But we were growing the slow organic way. And that time, it can actually, slow you down, right? So for example, let me give you an example of what happened to us. So so let's say in this quarter one, I have 15 lakh of sales that I have done. It's the revenue that I'm expecting that I'm going to get and receive very soon. But then there is a receivable period or a receivable time frame, right? That customers don't pay you immediately. They pay you after some time of you raising the invoice. So in my case, customers were paying me almost after 30 to 60 days of receiving the service from my end. And because of that, I had money on my books, but I did not have money in my bank account to pay salaries to my employees. So literally, there was a time 1.5 years into my startup, we are 25 people strong, and we've been funding the business from ourselves. So we were literally putting money from our savings to keep the ship running every month on month. But then there came a time where we could not fund it anymore. And there was a fundamental problem that we had to fix, at how do we solve this long receivable time frame. So we literally had this conversation where I'm on stage, there are 25 people staring at me, and I have to tell them that, sorry guys, we can't pay you your salaries this month, right? Now that's a very, very tough position to be in, because these people have joined you because you showed them a vision, you showed them an idea, and you gave them a promise. And that's the least of what they expect, right? That they're not going to be able to get paid for that particular month. Fortunately, because we were very honest and we gave them that promise that, hey, regardless of what happens, we will pay you. And if you want to stick with us, please stick with us, because we will bounce back from this situation. And we actually did, right? So out of the 25 people that were there at that point of time when I made that speech on stage, 23 people retained themselves, right? So only two of them left, and I'm sure they must have left for some sort of financial reasons, and they could not have, gone without salaries for a few months. But the other 23 people were committed to our idea. They were committed to the extent that we were going to, live up to our promise. And for 3 months, they went without salaries. They went with whatever partial salaries we could pay them, right? So we were only paying them 20% of what we owed them, etc. So that's like the cliff of death that you call in a startup very famously, that there will come a time where a startup will be literally on the verge of dying. And then the two things can happen. Either it will shut down because the startup founder gives in, or it will bounce back, and it will bounce back so spectacularly that everything will go well, right? And that's exactly what happened in our case. We bounced back with double our revenues. We solved the problem of our late receivables, and we were able to do a lot much better, and we tripled our revenues every year since then. Uh, and at that, I think that those kind of experiences, I think, are what make the startup. It's tough. You do not have a lot of dispensable income. Your lifestyle changes to a large extent, because you're trying to live within very limited means, etc. At least in the time you make it big, right? Now, for example, like the Zomato founder today is a billionaire because he's made it at that stage. But I'm sure when he started off in the first couple of years, he was bootstrapping. He was running a very tight and a very frugal ship, right? So from that perspective, I think these experiences also change you a lot. And I think I've carried some of those learnings over here. So even today, I feel that I'm very frugal in terms of how I spend money. And that's not because of any other reason, but it's because I know the value of money. I know how important it is, and what stage I was at one point of time. I also am very hands-on. So I don't, even at my job in Amazon today, if there's something that has to be done for the customer impact, or for the end customer to get the benefit, I don't call out that, hey, this is not my job, please have somebody else do it. I will literally do it. And I'll give you an example of that, right? So for example, uh, let's say there's a design that is stopping the engineering team from moving forward. Now, in that case, the design is part of the designer team, or person from the design team to give me that asset. But in case if I'm able to do it myself, I will pick it up and I will design using my own skills. It may not be the best design, but it will at least help my engineering team to get unblocked. So that's something where I don't shy away from getting my hands dirty. I don't shy away saying that this is not my responsibility. I'm just waiting for the designer to give my the work in. And those are the kind of skills that you can only come in once you've been a startup founder. You have a high sense of ownership. You have a high sense of agency, and you don't think of it as somebody else's work, but you think of it as your very own. So those are, I think, the kind of learnings and the kind of things that I have carried forward from my startup days.
Abhishek, So we are about to end this session because of shortage of time. I think this 1 hour is just not enough to listen to you and you know, understand your ideas and thoughts. I was wrong. I should have called you in the campus for entire day and probably would have had a much better discussion. Anyways, short answer, short question. Please be short, okay? So what
Sure.
is this new to internet customer segment?
Sure. So I think the new to internet customer is the fact that you must have heard this answer, right? India is of two India. So there is an India, which is the metro India, and then there is a Bharat that is very famously called colloquially in the media, which is the tier two, tier three, tier four customers who are coming from rural towns and rural cities, right? So the new to e-commerce is Amazon's way of acquiring the next wave of customers, right? So Amazon has already maximized its customer base in metros. Everybody most likely in Bombay, Bangalore, Pune will be using Amazon and will be a customer of Amazon. But Amazon has not been able to penetrate the tier two, tier three cities. Let's say, for example, so let's say Bhatinda, or let's say, for example, Leh or Ladakh, or let's say, for example, Bareilly. So those are the next wave of growth, or those are the next target areas that Amazon really wants to get into. And these are the customers who are not very e-commerce friendly. They're not very they don't speak very good English, for example. They're not very they don't have a lot of dispensable income. So they're looking at cheaper products, they're looking at more value products, etc. So that's the new to e-commerce that Amazon refers to, and that's the kind of experiences that I'm currently working and building on. So how do we get these customers to adopt to Amazon and to make Amazon a friendly destination for them to shop? That's the problem statement that I work on.
Okay. Thank you. I got your point. Okay. Now we have students pursuing BTech as well as MBA Tech, and that too in different disciplines: pharma, engineering, AI/ML, data science, agri, textile. So, is it necessary to pursue MBA to be a product manager, or alternatively, what is the role of an engineer, a computer engineering basically, in product management?
So I think there are different folks that have to come together to build a product, right? There has to be a business input. There's a business owner who's chasing a business goal. There is the engineering team which is helping build that product out and materialize it in a way. There is a design element which is making sure that customers like whatever you're building, and then there is a product manager who's orchestrating all of this eventually. So every role or every job function here has a value to play in bringing the product to life. From that perspective, I would think that an engineer can be a product manager, because engineering allows you to think in a structured kind of a way. It allows you to be, a very problem conscious, and figure out innovative answers to solving for problems. So it's not a mandate that you need an MBA to become a product manager. You can do that, and there are ways to go about it. But most companies today do have this requirement in some way or the other, that if you are an MBA from a good institute, then it's an easier path to get to product management. So again, it's not a deal breaker that you cannot become a product manager without an MBA, but it would be far easier if you were to have an MBA to become a product manager. Let's put it that way.
Thanks a lot, Abhishek. We are really short of time. At NMIMS Shirpur, we have so many clubs for so many different activities. And today, this Saturday, we have continuous sessions of different activities going on. Just after this, we have robotics session going on in this seminar hall. Uh, we usually end the session by asking the speaker to share the or express the last single thought he would like to end up with. But I'm not going to ask you this question because our discussion is not over here. Some other day, some other Saturday, I would request you to come back again and answer my remaining questions.
Sure.
Uh, So I'm not asking you that question
Yes,
about
we'll
last
reserve
one
that for the
thought.
next time.
That would be for some other session. For
Yes,
now, thanks a lot for joining us. On
sure.
behalf of uh, NMIMS Shirpur campus, MPTP Shirpur campus, I express my heartfelt thank to you for sparing your valuable time with us and sharing and basically putting lights on important aspects of product management. I also take this opportunity to express my thank to our director, Dr. Sunita Patil, all the associate deans, faculty members, staff, and our very helpful faculty mentor, faculty coordinator, Dr. Payal ma'am, Dr. KV Patil sir, for consistently helping and guiding us in organizing and conducting such sessions. Once again, on behalf of entire team, I express my thanks to you, Abhishek. Have a wonderful day. I will get back to you one more time some other day. Thanks a lot.
Sure. My pleasure, and it was lovely talking to you folks.